Okay. After giving the important points, I am going for a problem. From the following particulars, prepare a bank reconciliation statement for Jindal Offset Limited. It is a company. Balance as per cash book is 2,40,000. Checks issued but not presented in the bank amounts to rupees 1,36,000. Checks deposited in bank but not yet cleared amounts to 90,000 rupees. Bank charges amounts to rupees 300. Interest created by bank amounts to 1,250. The balance as per passbook is 2,86,950. In this problem, he had given you both cash book balance as well as passbook balance. And these two balances, they are not tallied. Okay, cash book it is showing 2,40,000 and passbook it is showing 2,86,950. These two balances, they are not agreeing. They are not same. Why? Due to some problems, due to some differences, okay, they are not tallying with each other. Now it is our duty to reconcile. Mind it, okay, we can go for bank reconciliation from the businessman's point of view. No bank will prepare the bank reconciliation statement. It is not necessary for the bank. It is the responsibility and it is the duty of the businessman to see the balances of cash book as well as passbook, and if they are showing differences, he has to and he must prepare the bank reconciliation statement. Mind it. Now we are going for the solution, please. Okay, we are going for the solution. Balance as per cash book. He had given you balance as per cash book means it is nothing but a favorable balance as per cash book. Okay, when you are doing the problems, you have to observe what balance he had given you, what type of balance he had given you, whether he had given you the favorable balance or overdraft. Okay, 99.99%. If you are given the favorable balance, the result must be the favorable balance of the other book. In rare circumstances only, you will come across overdraft balance. Whether you take cash book or passbook, whatever it may be. Okay, 99.99%. Okay, what balance you are taking, you will get that balance only. And 0.01% only, you will come across this unfavorable balance. Either you take cash book balance or passbook balance. Mind, you have to keep that in your mind. Now, we are going for the solution amount. Balance as per cash book. It is 2,40,000. Next, checks issued but not presented in the bank. When you are issuing checks, they will appear on the payment side of the cash book. When they are appearing on the payment side of the cash book means the cash balance will come down, will show less amount, and the passbook balance will show more amount or high amount. Then how to reconcile this? You have to add that amount to the cash book balance or you have to deduct from passbook balance. Here we are going from cash book, so it is compulsory that you have to add that amount to the cash book balance. So checks issued but not presented 1,36,000, it should be added. Next one is checks deposited into bank but not yet cleared amounts to 90,000. One by one I am going. 90,000. When you are depositing the checks, automatically the cash book balance will show high amount and passbook balance will show less amount. in order to reconcile, you have to deduct this checks deposited, okay, from cash book balance. Thereby, you are going to get the passbook balance. So, this 90,000 rupees, it should be deducted. Next, bank charges amounts to rupees 300. Okay, for doing all the activities, the bank will charge some amount, and we will call that thing as bank charges. Okay, the bank charges will be shown on the withdrawal side of the passbook. So thereby, the balance of passbook will show less amount, whereas the balance as per cash book will show a high amount. If you want to reconcile this bank charges, whatever it may be, it must be deducted. It must be deducted from cash book balance. So 300 rupees ought to be deducted. Next, interest created by bank amounts to rupees 1,250. Interest created by bank amounts to 1,250. When the bank, when it is showing the interest amount on the deposit side, automatically the balance as per passbook will be high, whereas the cash book balance will show less amount. What we have to do? We are going from cash book, so you have to add this 1,250 to cash book balance. Then automatically you are going to get the passbook balance. Okay, so the passbook balance, when you take into account, it comes to 2,86,950. Now, how to check this? How to check this? Okay, you got the answer. Passbook balance as per, passbook balance 2,86,950. Okay, whatever it may be the added items previously, you have to deduct, and whatever it may be the deducted items previously, you have to add. Thereby, you are going to get the balance as per cash book. This is the way that we have to do the bank reconciliation statements. Okay, now we are going for an overdraft problem. Okay, the problem is, from the following particulars, ascertain the balance that would appear in the bank passbook of A on 31st December 2017. Okay. The bank overdraft as per cash book on 31st December 2017 is 6,340. Interest on overdraft for 6 months ending 31st December 2017 is 160 rupees entered in passbook. Next one. Bank charges of rupees 400 are debited in the passbook only. Next, checks issued but not cashed prior to 31st December 2017 amounted to 11,68,000. Next, checks paid into bank but not cleared before 31st December 2017 were for rupees 22,17,000. Next, interest on investments collected by the bank and credited in the passbook is 12 lakhs. This is the problem that we come across. Here, we are having the overdraft balance as per cash book. So, when you are taking overdraft balance as per cash book, first thing is, you are going to get overdraft balance as per passbook. Okay, in that way only you have to go. And you are taking an unfavorable balance as per cash book. Okay. Interest on overdraft, first one is Interest on overdraft for 6 months ending 31st December 2017 is 160 entered in passbook. Okay, interest on overdraft. Interest on overdraft. Okay, overdraft, mind it, overdraft balance will increase by payments in cash book and withdrawals in passbook. Here, interest on overdraft. So, automatically the withdrawals will increase. And what will happen to cash book? Where it will show high amount, whereas in cash book it will show a less amount. So what you are going to do, this interest debited in the passbook but not entered in the cash book, 160 rupees, you have to add to the cash book balance in order to get the passbook balance. Next, bank charges of rupees 400 are debited in the passbook only. Same. Okay, here overdraft balance will show more, whereas as per passbook. As per cash book, the overdraft balance will show less amount. When you want to get the passbook balance, you have to add. So bank charges, okay, bank charges 400, you have to add. Next, checks issued but not cash prior to 31st December 2017 amounted to 11,68,000. Checks issued. When you are issuing checks, overdraft balance as per cash book, it will show more, that is high, whereas passbook will show less. So what we have to do? In order to reconcile this checks issued but not presented, it should be deducted. It should be deducted. Next, checks paid into bank but not cleared before 31st December 2017 were for rupees 22,17,000. Checks paid into bank. Checks paid into bank means overdraft balance as per cash book, it will show less amount, whereas overdraft balance as per passbook, it will show more amount. So what we have to do in order to reconcile this amount, this difference, okay, checks deposited, okay, whatever it may be, checks deposited but not created in the passbook, it should be added. It should be added to the overdraft balance as per cash book. Mind it. Okay, the last one, interest on investments collected by the bank and created in the passbook, 12 lakhs. Yeah, and created by the bank in the passbook. It means that they are showing on the deposit side. Overdraft balance, whatever it may be, by deposits it will come down, that is it will show less amount, whereas overdraft balance as per cash book, it will show high amount or it will show more. So what we have to do, this interest on investments, it should be deducted from overdraft balance as per cash book. Then you are going to get the balance as per passbook. Okay, here when you take into account, you will come across a favorable balance. When you come across, you will come across a favorable balance. So you have to write balance as per passbook. This thing also you can recheck. This thing also you can able to recheck. How? You got the passbook balance. You have to take that passbook balance and whatever it may be, the items that you have deducted previously, you have to add to this passbook, and whatever it may be, the added items previously, you have to deduct from this amount. Thereby you are going to get the cash book balance. This is how you will come across the problems of the BRS. And there are some problems. Okay, there are some problems. Okay, we are going to deal with that, and in the next classes we are going to see that. Okay, fine. Thank you.